It was never a question of what would the thing be. It was always real estate. I wanted to be a broker because sales has always been my background. And most importantly, I executed and I was consistent with my execution long enough to see the outcome. I'm a big fan of relationships. I look at everything as a long-term relationship. It's not about what can I gain today and what's the short-term incentive. Life and business are a lot easier when you do it with people that you trust and that you have rapport and relationship with.
This is your Real Estate Syndication Show. I'm your host, Whitney Sewell. Today, our guest is Matthew E. Drane, ultra experienced broker, senior director of Ohio multifamily, Gray Steel. He's been VP of investments at M&M, and multiple other roles there as well. But 13 years of experience as a CRE executive, broker, and investor. You're going to hear that today as he talks through why commercial real estate brokerage for him, but also how he scaled. Number of pivots he's had to make through his career. But we're going to dive into to that relationship between operator and broker and what that needs to look like. And I appreciate some of his just feedback on that relationship. It's crucial. Most of our projects have come from relationships with brokers that we've developed over many years now. And so it's so important. And I hope whether you're a operator or broker that you're listening to that. Even as an investor, he's going to dive into some of the common traits of the most successful operators he's worked with. And I think it's helpful. It's neat to hear that from the broker side, things he's seen over the years. You're going to learn that and many other things from Matthew today. Matthew, welcome to the show. I'm looking forward to hearing, some about your just a commercial real estate journey. But I know you've scaled quickly. You're helping lots of other people scale. You've had to pivot numerous times, and it's hard for us as entrepreneurs. But we got to be able to do some of those things. So I'm looking forward to the discussion. Welcome.
Thank you so much, Whitney. It's great to be here, and I really appreciate the invitation.
Honored to have you. And well, let's do just that, Matthew. Why commercial real estate? Why brokerage specifically for you, getting into this industry?
Sure. So for me, it was always real estate was going to be the thing for me. I'm 42 years old or years young. I grew up in the Carlton Seat era. I vividly remember reading, The Art of the Deal growing up sometime in my teens. Obviously a few books that are probably on your shelf as well. So it was never a question of what would the thing be. It was always real estate. And then naturally, growing up, my father and my grandmother, they owned property. They owned duplexes and quads. And I always had this burning desire to try to find a way to do what my dad did, but maybe elevate it and kick it up a notch. So multifamily is where I gravitated to as a asset type. And why brokerage? Two reasons. I really did buy into the unlimited earning potential feeling. So I bought into the belief that there's truly no cap on my income if I get into investment sales. That was number one. And then secondly, I eventually wanted to own apartment buildings. So I figured, what better way to learn what to do and what not to do than to watch people and truly understand at the asset level what success looks like. I figured what better way to learn how to be a good buyer than to underwrite a couple dozen, or in my case, 50 or more deals per year. So that's why real estate, and that's why multifamily, to answer the question.
Yeah, that's awesome. I like hearing how people were exposed at first, right? And sometimes it's because of other family members, or it's like all of a sudden one day it hits you that there's this thing called real estate. And that was kind of me. Like I wasn't raised around that. But man, it seemed like an amazing opportunity. But it sounds like your father and you say your grandmother?
Yeah, my grandmother. My grandmother was a property owner, yeah.
So, moving into the brokerage world, speak to, was it always your plan to continue as a broker career-wise, or did you hope to, say, be an operator or own, or what was your thought there early on and now, and what is it today?
It's funny. I think if you've been in the business long enough, regardless of what side of the table you're on, you meet enough brokers who their primary goal in life is to become an owner, operator, or a sponsor. And then you also have, sponsors and owners who look at what brokers do and naturally say, hey, that's really cool what you do. I wanted to be a broker. I wanted to be a broker because sales has always been my background. I have since learned after going the route of trying to buy deals, myself, that it's a lot more fun and it's more efficient to simply invest with clients versus trying to be a great broker and be a great operator. I've rarely met a person who does both things extremely well. So my primary focus is on the brokerage side. I want to help other people accomplish their goals, and in doing so, find the right operators, the right potential partners that I would enjoy to do business with. That is my preference at this stage of my career. But of course, you have to learn it the hard way. You have to buy some deals that go well and others that go wrong to land on that path forward now, which is to partner versus try to do it all.
How did you maybe give us, just a little bit on, or how you would guide somebody on learning sales, like developing that ability, or how do you help somebody with that now?
Early on, it started out with my father. I mean, he really encouraged me to embrace my entrepreneurial, I think, gift and that entrepreneurial drive and spirit. So on Saturdays, I would take my lawnmower and I would push that lawnmower around the neighborhood, and I would find some work, and I would make money cutting grass, and I would learn how to interact with people. I transitioned that into more traditional, teenage jobs. I worked at a place that's no longer in business called Circuit City, and interacting with customers on a daily basis grew into several internships. I had corporate internships at Procter & Gamble, at Cintas, at Kraft Foods, North America. So I always gravitated toward business and sales. The key difference for me in my career, when I was around 22, I had a chance to go to Baghdad, Iraq. And the company that I was with, we were a global consulting firm. Gallup was the name of the organization. At 22 years old, I was able to leave the country and for 9 months be in a war zone. And effectively, the goal of my assignment was we had a base contract of $12 million with a ceiling potential of $20 million if we were to maximize the total contract value. That was the opportunity that taught me that sales can be very transactional. It can be very tangible. I was used to that, selling based off of price competition. But the consultative sales process is what gave me a natural path to go from selling first aid supplies to a mechanic shop, to understanding the consultative sales process and then taking that skill and then going into something like investment sales, which is less tangible, more of a 9 to 12 month, deal cycle and time horizon. That was the tipping point for me in my early career. So I always wanted to be in sales. It was the exposure to the consultative sales process that then allowed me to take that and go into investment sales.
So you're saying we need to be in a war zone for a while to become a good salesman?
If you thought you were a good salesman, in calm peacetime, it definitely shows you what you're made of when you're trying to conduct business and have a consultative approach with incoming mortar fire. So it definitely puts a little pressure on the sales cycle and experience for sure.
Was that 2005 by chance?
It was during the surge, yeah. So during the surge, it was sometime 2006, 2007, because I vividly remember the year because I got married in 2008. Goes overseas for 9 months, realized that life is much more important, and there's more important things than work. So yeah, it was 2006, 2007.
Well, I was there all of 05 is when I was doing the math, and you said your age and whatnot. So I was there all of 05, and I also came back and got married in 08. So that's so interesting.
The population growth of our country as well as the marriage rate, So you and I have a lot in common. We've done our part.
That's right. So since Matthew starting in the business and learning sales, and I feel like we're all selling all the time, right? Whether we like it or not, and even if you think you're not in sales, you probably are. But speak to them, just how you ramped up your business. What changed, over your career to be able to scale? Give us some thoughts or ideas, what worked for you, or maybe even looking back, and what would you have done different, or maybe you can look back now, because I know I can see, okay, man, the Lord opened this door, or this thing happened, that really helped me to scale.
So 2012, I think the year and context is important. So 2012 is when I made the transition into full-time commercial real estate investment sales. I was given an opportunity. There's a large publicly traded company that took a chance on someone like myself. I didn't come from an Ivy League education. I didn't have family relationships in the industry. So this company is known for phenomenal training platform and program. And they took a chance on me, and I just blindly believed everything that I was taught. I was taught that I had to specialize in a particular product type. There's no better way to become a master at something than to focus on one type of asset. I focused on a particular sub-market. So I really dialed in where I was going to practice my business. And for me in 2012, that was Hampton Roads, Virginia, multifamily. And when I started out, I focused on the private capital segment of the market. So deals really as low as, say, 8 or 10 units. And my first 24 months, I really didn't focus on deals above 100 units. Part of that was because I wanted to focus my attention in my business in areas and with owners who I could actually provide value. So being newer to the industry, I didn't see a path to provide value to someone that owned a couple thousand units at the time. So I started where I could add value. And I did a lot of sub 50 unit apartment deals in a short period of time because I built my business in that very narrow box and lane of Norfolk multifamily under 100 units, which allowed me to gain traction and quickly capture market share to the tune of about 22% of the market that traded. I was involved in both sides, or at least the list side of those transactions. That's how I got started. I trained with a great firm. I believed everything that I was taught. And most importantly, and I think this is the key characteristics that a lot of folks miss, I executed, and I was consistent with my execution long enough to see the outcome.
I was just taking my boys to guitar practice or lessons yesterday, and I was talking about almost exactly what you just said. It's like, you don't have to have all the degrees, but man, when you can be consistent and disciplined, and like you're gonna go places, right? I mean, like when you can be consistent and disciplined over a long period of time, it speaks volumes, right, to your success. And so it sounds like that's you were disciplined, you were consistent, you're like you kept just chugging along, right, for a long period of time, and but you've also had to pivot a few times, right? Speak to maybe a time you've had to pivot, and maybe it was a hard decision, or why you had to do that.
Sure. I mean, so I started my business in 2012. From an income standpoint, my story was very similar to what most successful brokers experience, which is the first 12 months, it really is about surviving and just learning the fundamentals. And maybe you close a deal or two, but it really is a keep the lights on type of income. I made $34,000 my first full calendar year. However, the foundation was being laid. In my first 12 months, I listed 12 buildings, so 12 exclusive assignments or listings. I closed 7 deals in my first 12 months. That's pretty successful. However, the income and the waterfall, once you split with your broker, once you split with your mentor, there's not a lot of money left over when it's all said and done. So my first year, $34,000. My second year, I got into about $118,000. And then my third year is when I really hit 220 or more consistently. And from that point on, I kind of thought I was on my way, right? The reason I mentioned the income growth is that's also aligned with, as I developed in the business, I stayed laser focused on one product type and one sub-market. So naturally, I began to get market share. The pivot came in year 4 when I had, at this point, a small team. One of my former partners, he's still very active in that market. He's a dominant broker. He got to a point to where he was doing, 7 figures consistently as a producer. And now his team does several $million a year in volume. I got to a point to where the opportunity was presented to me. And that opportunity was, Matt, you've built a business. You've proven that you can grow market share. You've proven that you can not only do it yourself, but transfer that skill set to others. And the opportunity was to become a market leader. So I took the opportunity to become a market leader for this company, and I managed an operation that consisted of 3 offices. So DC, Maryland, and Virginia. And we did about $1 billion a year in annual revenue. And I should say annual sales volume. Revenue was closer to about $25 million top line. And that was about 120 producers. So we did volume. We're doing about 200 to 250 deals a year, a billion in volume, and 25 million or so in top line revenue. So that was a pivot. And what I loved about that pivot, it taught me a few things. I truly believe that now I could operate a small business. That's not an insignificant income. It taught me what I loved about that role. What I enjoyed most was the ability to hire, train, recruit, and really develop a sales force. That's the part that I loved about that role, because I could bring on someone that had no real estate experience and train them up to where in about 12 to 18 months, they were producing 200,000 or more in gross income. And that was really fun to me. I give the analogy in this business. I've been the fullback that runs the ball into the end zone. I've been on the sidelines, calling out plays. And I've been in the box as a market leader, really with a more strategic vision of where I wanted the team to go. I played all those roles, but that was a pivot. I went from finally getting into an income level where, hey, this is what I came into this business for, to now having to shift into a whole nother role that came with different incentives and also different compensation structures. So that pivot was one of many throughout my career. And I've since made another pivot because I've stayed in that market leader and or training and development role for the better part of 6 years of my career. In June, I pivoted back into brokerage. So in June of this year, I went back into brokerage, and I'm relaunching my business from the ground up because I see a phenomenal market opportunity, and I'd rather have a little bit more control over that income and over that destiny. So I'm back to where I started.
Hiring, training, recruiting, all that, man, some very valuable skill sets. And when I was thinking about training specifically, you're training, other newer brokers, I'll say, to be able to scale their business, right, and be able to get started in this space. And it sounds like pretty quickly, right, if they're able to have that income, within a few months-ish, whatever time frame. A lot of operators listen to the show as well, and a lot of passive investors. But, speak to how you coach them to work with operators a little bit. But when talking to the operators right now, talk about that relationship a little bit, or give some tips on how, even as an operator, to best manage those. Is such an important relationship. So many of our projects, the majority, I'm thinking back, of our projects have come through broker relationships, right? And it's taken a few years, right, to develop a number of them and to close some projects, and so they can see we can perform all those things. But speak to that a little bit to the operator that's listening, that may be even pretty experienced, but just any tips, as far as how to just nurture that relationship.
That's a great question, and I love, this is a part of the business that I really enjoy, right? Because while there's so many non-controllables in our business, you can't control the Fed funds rate. You can't control, when loan proceeds are brought in. You can't control when lenders are, spreads are blowing out. You can't control so many things in our business, right? The one thing you can control is, your actions, your activity, but also how you intentionally steward relationships. So stewarding relationships has been a theme of my career, and it goes both ways. As a broker, there's been seasons where, yes, brokers are very guilty of riding a hot market and not having to rely on relationships as much, when they know that they have, an endless pool of buyers who are willing to pay a certain price, and the relationship is not as important to some brokers. For me, I've always been a steward of those relationships because it's a two-way street. Operators, they give me direct market feedback, and it helps me understand what the market is willing to bear, because if I can really dial in with an operator's business plan, how they view an opportunity, some of the blind spots that I might see as a broker when I'm marketing a deal, I get those blind spots, and I have that relationship from an operator who can help give me a different perspective that I may have missed as a broker, right? So there's value both ways. And of course, one of the biggest values that a broker provides an operator or a principal is deal flow, both on market and off market opportunities. There's a level of rapport that's built. There's a level of credibility that one can establish with a broker. The easiest way to gain trust and to build rapport with a broker is when you're asking for deal flow, to be very specific. Hey, I'll look at everything above 200 units in these 4 states. That's not very helpful, right? So really have a more refined and clear buy box. That helps me dial it in a little bit, so I know what to send you and what not to send you. The single most important thing after just identifying your buy box is, when I send a deal, Doesn't matter if it's a green light, a red light, if it's pencils down, doesn't matter. Provide some feedback, provide 2 or 3 bullet points as to why the deal is a pass. Provide 2 or 3 bullet points as to what you would need in order to help make the deal pencil. And of course, when you get to a point of truly showing interest in the deal, being a great operator, being a great principal, showing your schedule of real estate owned, sharing your underwriting. That way we can fully and transparently understand how you view the deal. That way we can also assess potential risk in your underwriting relative to other prospective purchasers. So open and clear, transparent conversations and communication is the only way to really grow from a transactional relationship to a partnership. And I'm 42 years old. I will say this to any owner in my market. I'm going to be in this market for years to come. The sooner I can build a relationship and rapport with you, the sooner that we can actually start to go through that back and forth exercise of understanding what your goals are for your business, how you intend to grow, how I might be a resource in filling some of those gaps that you might have in your growth plan, the sooner we can both become really successful and accomplish the goals that we set out for our own businesses and for ourselves. I'm a big fan of relationships. I look at everything as a long-term relationship. It's not about what can I gain today and what's the short-term incentive. Life and business are a lot easier when you do it with people that you trust and that you have rapport and relationship with. I want to find that tribe and go further with that tribe than trying to find one-off transactional relationships that put me back on that hamster wheel every single year.
Speak to what about some common traits that you've seen amongst operators, over the years of your experience? Like, I'm sure you've seen some operators stand the test of time, right? Stick around for years and years and years and be successful, keep buying deals, while some fade away, right? For one reason or the other. And what are some of the common traits that you've seen amongst the most successful operators?
Sure. I mean, common traits that I've seen for successful operators, they have multiple brokerage relationships. I don't know if I've ever turned down an opportunity to meet with anyone if it's related to my business, right? So they say yes, to meeting, simply because you never know what's on the other side of that meeting or the other side of that phone call. So they're open to establish more relationships. In my market, there's some very dominant brokers who've been in the market for, a dozen years. I've been in the market as a broker now for less than 6 months. So naturally, I'm at a disadvantage relative to some names who've been here longer. But I find that the most successful developers, the most successful principals in my market, they're still willing to meet with me. They're still willing to hear what I have to say. And most of those conversations, they end with an impression that the time was well spent. So they're willing to say yes to the meeting. They are willing to share, their logic, share their math. It does no good to present an offer that is 30% off list with no explanation, right? Help me understand how you got there. And we can start a civil exchange of ideas, and we can maybe tweak a few things here and there to get closer to where we believe we could possibly be, or we simply agree to disagree, but having the conversation. So not only agreeing to meet, but agreeing to truly do the work and share and exchange together to see how we can hopefully arrive at a deal, if not now, in the future, that fits your needs. So those are 2 keys, I would say: communication, being willing to meet, and then truly sharing underwriting, sharing goals, sharing your cost of debt, sharing your cost of equity, helping me understand what you're solving for, right? If I know that you're solving for a 15% levered IRR over a 5-year hold, I know what deals not to bring you, and I know what deals might make sense if we can overcome a couple of obstacles. It's hard for me to be an advisor if I have no idea what the goal is.
What about that specifically? Anything in the underwriting that you've seen that's a common theme, that what they're looking for, or the amount of leverage, or the amount of reserves, or the assumptions that they're making, or anything that you're like, man, the guy that if I, speaking as you, if I was going to be an operator, I want to look like that operator right there. Like, what do they do? What's in their underwriting that you're like, that makes sense? Or
Sure. I'll answer it 2 different ways. One, as a broker, if I can't concisely explain to you in 3 steps how you'll make money, right? So what do you need to get into the deal? What do you do once you own the deal? So that could be invest $5,000 per unit in light interior cosmetic improvements. That $5,000 per unit will help you realize a $350 a month rent bump relative to the classic unit to the renovated. Once you do that and you stabilize the asset over an 18-month period, you can then refinance 30% of your initial equity out of the deal. If I can't explain in 3 steps how to make money, it's probably not a great deal. And I think operators have the same opportunity. If they can't explain to me in very, very concise, short, bullet points, how the deal makes sense for them, it's harder for their investors to understand, but it's also harder for me to understand what the business plan is. So having brevity and clarity on the business plan is really important. And then also, you mentioned kind of what are some of the things in the underwriting. Those owners, those operators who are always more conservative in terms of loan proceeds, if they can make the deal work with less leverage, if the deal only works based on 4 or 5% annual rent growth assumptions, those are things that I don't always see working out as well. Whereas if you can underwrite on the back of a napkin and explain how it will make money, probably a really good deal. The model is just icing on the cake. But if you can't take out a napkin or, a standard calculator and do some quick math and understand how to cover debt service and what your return on equity would be, or at least your cash yield year one, you don't really need a model to figure out if a good deal is a good deal.
Yeah. I've heard so many times lately, so many times since doing the podcast, but even recently, a number of people talk about, man, it should be simple and clear, right? Or I should be able to explain it to my 11-year-old, right? Type of thing, so they can understand. So transitioning just a little bit here to a few final questions. What are your thoughts or maybe even predictions over the next 6, 12, 18 months just in the real estate market? What are you expecting?
Sure. I'll speak to my market in particular. So I still am very much focused on the Columbus multifamily private capital market. So I define that as buildings between 20 and say 200 units. And in Columbus proper, there's just shy of 1,200 units. Quick context. In 2022, there's $2.3 billion worth of multifamily sales in my market. Year to date, and here we are approaching the end of the year, we're mid-December, there's just shy of 600 million. So we've come quite a ways from where we were 2 years ago. With that said, I still think right now there is a great deal of demand. So the appetite for multifamily in my market is high. There's scarcity of inventory. I mean, we've only had 60-something odd trades year to date. So there's not many deals that are trading. I think part of that is because there's still about a 10% delta between seller expectation and what makes sense from a buyer yield. So there's still a fair amount of, disconnect between price expectation, the bid-ask spread. And I think there's a sentiment that the new incoming administration, further rate cuts, and a more favorable lending environment will help close that gap. I'm not as bullish on that for 2025. I think we're still probably 18 months out from seeing a material impact in interest rates to solve for that delta between seller expectation and buyer yield expectation. So I don't think 2025 is the year that just all of a sudden, the floodgates are open. I think we're going to start to work through some of that inventory. The reason I still gravitate toward the private capital niche of the market is because those deals have real underlying motivation, partnership dissolutions, problems, deferred maintenance, maturing debt, things that the investment committee and the fund mandates for some of these larger institutional assets simply don't have. These 20 to 200 unit apartment deals are still very much owned by private individuals and partnerships. I'm gravitating toward that segment of the market because that's where the true underlying motivation still exists.
What's your best advice for passive investors today? So somebody that's like, okay, I've got some capital, I'm ready to invest with an operator. What are your thoughts for them as far as the economy right now and investing right now?
Yeah, I think investing in markets that still make a lot of sense. So start at the macro level. Is this a good market? Does this market, is it oversupplied? What does the data suggest from a population growth standpoint? So really doing the math and doing the heavy lifting on, is the market the right market? And then I would just say, going back to the underwriting, if an operator is not willing to show, if a GP, if a sponsor is not willing to show the underwriting, I would really question that, because they should have an understanding as to why that matters and how that has implication to their investment. You don't have to necessarily get in the weeds. And I know every single operator is different when it comes to sharing those details, but you should have a pretty good idea of how is the GP looking at the opportunity. Are those assumptions that are being made, are they in line or outside of what other norms and standards might be? I mentioned the growth assumption on rents. I mean, that's a pretty important assumption when it comes to how their projections on yield will shake out. So making sure that there's not too much optimism from the deal team, and then maybe confirming that with more experienced LPs and really kind of having a conversation with their experience and how they view the opportunity. So I don't think it's anything outside of what most would say. Do some homework, feel good about the overall market, and then drill down into the actual deal from there.
Matthew, what are some of the most important metrics that you track? It could be personally or professionally, either one.
I'm a big fan of tracking my movement. So, with 3 boys under the age of 11, I move quite a bit. So I'm really intentional about tracking my personal health. I really believe that I want to be a healthy father and be here for a long time with my children. I also track on a daily basis. I call it Drane University. How am I spending my morning? And I've taken some things from the Miracle Morning, and I've incorporated that into my morning. But every single day, between the hours of 5:30 and really 7 o'clock, that's Drane University. That's when I really lock in and prepare myself for the day. So I'm keeping up with all my KPIs personally during that window as well. When it comes into the market, there's a lot of things that I track, but obviously stock and velocity for my business. That's the core root of how do I determine if I have the fundamentals of earning a certain amount of money per year is how many buildings exist in my market, and looking back over a 5, 7-year time frame, what's most commonly changing hands every 12 months. And then naturally, how do I obtain market share to where, I mentioned 66 deals that have traded year to date. If I have 10% market share, that means I would have sold 6 deals. And if my average fee is $100,000 growth, that's how I'm baking in and backing into the math of how do I personally make, $300,000 to $400,000 net to me per year. I have to be in a market where the math actually supports that business plan. So I'm tracking, velocity, stock, things like that in my market, and also how I need to grow market share to realize my personal goals.
Yeah, I love the intentionality. Also, I've been a big believer in morning routines and personal development for a number of years now. So I love that structured morning. My mornings have been kind of all over the place lately with a newborn, but normally I really love just being up at say 5, and then just even every 15 to 20 minutes, I kind of know what I need to be doing to get those things done in the morning that are important, like you're talking about. And what about any other daily habits that you've seen that have helped produce success for you?
Scheduling. I mean, early on, I learned that if it's not on my calendar, it doesn't exist. In real estate, as a rule of thumb, I learned early on that if it's not in writing, it doesn't exist. So I learned early on to put it on paper. So if my daily goal is to touch 25 to 30 owners by phone, I learned I need to schedule a 1 to 2 hour call block every single day. It's the only way to ensure that the day doesn't end without me making sure that I achieve that goal. So my calendar is really, really strict. It's color coded. It gives me the visual, and it's my roadmap for the day. And then I also utilize dashboards to really show me where my actuals are relative to my goal, knowing that there's a correlation between those KPIs and my quarterly, annual, and in my case, I have a decade, a 10-year forward look on where I want to go. It all rolls up into that 10-year dashboard. So I'm a numbers guy. I like to make sure that I do things with intention.
How do you like to give back?
I like to give back in a number of ways. The one thing that has changed my career was when I really found out that not only could I do this business and grow my personal wealth and income, but more importantly, I can show people consistently how they can do the same. So how I give back now, I was somewhat exhausted with the coffee meeting. Can we grab a cup of coffee? Can I pick your brain? And I thought around and I said, there's not something that really exists in scale where someone that doesn't work with me, that's not my junior, that's not necessarily in the same company as I am, could really have access to me beyond just me making time to go have coffee. So I started a community. That is designed to really lift the hood on commercial real estate and pull back the curtain on all the things that have been mystified to the general public. I've been fortunate enough to be trained by, employed by over the years, and trusted by many large firms across the country to train their advisors. So I'm extremely competent on how to do it. Now I want to share that expertise with more of the general public, anyone who wants to learn the art of brokerage and do it in a more efficient way than just say, maybe getting on my counter to have a cup of coffee. So my community is exactly what I described, Revolt CRE, so www.revoltcre.com. That's where we gather. We trade business development ideas and strategies. There's formal education and training. We have 5 standing opportunities each month to do things like role play, so practice your pitch. We have a deal or no deal section where we underwrite real deals together and we tweak and go through that process. But more importantly, just a place to gather and grow as business development and sales professionals. And that's how I'm giving back today, is by training others in what I've learned to do over the years, but also giving real time and mentorship through that community.
Yeah, wow. That would be priceless for someone becoming a broker, no doubt about it. Well, I'm grateful, Matthew, to have you on the show and just really talk through, why commercial real estate and brokerage specifically, and how you've pivoted a number of times, and even some of the tips working with operators and how some of them have been more successful. Very grateful for your input and experience, just being willing to share. How can the listeners get in touch with you? How can they learn more about Revolt CRE as well?
Sure. So my favorite platform is LinkedIn. So you can follow me on LinkedIn, Matthew with 2 T's, E, Drane, D-R-A-N-E. I post content about my market. I post content about the art of brokerage and lessons learned. So LinkedIn is a great place to find me. We also have a Revolt CRE LinkedIn group. So if you message me, I'll give you access to the private group. The private group, I share a lot of resources. I just shared a 37-page commercial real estate glossary. And then the website, revoltcre.com. If you go to revoltcre.com, you can actually download that glossary for free. But again, it's a way of just giving back. It's a resource. And if you'd like to learn more about our community and how we're helping people across the country, message me via LinkedIn or through the website, and you can get a hold of me there.
Awesome. That's a wrap, Matthew. That's the end of the show.